A Turkish passport removes international travel restrictions without requiring you to pass a language test or spend a single mandatory day residing in the country. Most investors default to the standard $400,000 real estate option, but that path involves property management, mandatory appraisals, and the possibility of title disputes that can delay the citizenship application for months. For an investment of $500,000, you can purchase specifically designated government treasury bonds instead. This Eurobond route is a liquid alternative that many advisors overlook. Paying a $100,000 premium for sovereign bonds bypasses the specific volatility of the local property market. You trade the complications of developer solvency and maintenance for a fixed income instrument held in bank custody. The investment boundaries are absolute. You must wire exactly $500,000 or the equivalent in an accepted currency from an account outside of Turkey. Those treasury bonds must be held for a minimum of 3 years. Any partial early redemption or attempt to liquidate the principal before the 36-month mark instantly breaks the citizenship path. Flawless adherence to these constraints is the only way to successfully convert a financial position into a second passport. The process begins with local administrative setup. You must acquire a Turkish tax ID and open an account at a licensed Turkish bank. You wire your foreign funds into this account, which the bank then converts into Turkish lira at the official central bank rate to fulfill the program's currency requirements. This conversion generates the foreign exchange purchase certificate. This is a vital document that proves your capital entered the system from abroad. The bank then purchases the designated treasury bonds, which officially starts the 3-year legal clock required for the investment hold. Completing this sequence correctly satisfies the first major threshold of the government's citizenship program. The Ministry of Treasury and Finance then reviews the purchase and issues a conformity certificate, which validates your investment for the citizenship file. Before filing for citizenship, you must apply for a short-term residence permit. A common error here is failing to secure Turkish private health insurance first. Without it, the residency application will be rejected. Once residency is granted, you submit your final file, including apostilled birth certificates and criminal records, to the National Citizenship Office. After passing an internal security screening, the application moves to the final stage, executive presidential approval. Managing this 7-step sequence with absolute precision is the most efficient way to clear the government's vetting hurdles and reach the final approval stage. There is a misconception that a Turkish passport automatically creates Turkish tax residency. In reality, residency is determined by your domicile and physical presence, not your nationality. While holding the bonds, non-residents pay 0 Turkish withholding tax on the interest, allowing you to collect the full yield. If you move to Turkey, Law 7582 provides a 20-year exemption on foreign-sourced income, protecting your international revenue from taxation. This makes the Eurobond path both an immigration solution and a structured tax shielding strategy for high-net-worth individuals. From the date of your bond purchase, the process typically delivers a physical Turkish passport in 6 to 12 months. You acquire a sovereign-backed asset with 0 maintenance costs and a travel document that provides a second identity on the global stage. The risk lies in the paperwork. Errors in document apostilles or an incorrect filing sequence can cause months of administrative delays. ÖZMEN Consultancy coordinates this entire regulatory cycle, from bank account setup to the final citizenship filing, to ensure every document meets the government's exact standards. In the world of citizenship by investment, the most reliable path to asset protection is through the cleanest legal mechanism available.